I'm Foreman, and in this video I'm going to analyse ASOS stock by giving my views on the business and whether I personally would buy shares of ASC right now. And if you find the video useful or entertaining, then please try one of these, support the channel. Before starting this, I'd like to disclaim that I potentially have a conflict of interest, which is I am an investor of Boohoo, which many people compare the two businesses and link them as competitors. Despite this, I'm going to try and remain as unbiased as possible, and I'm primarily researching ASOS for the idea of learning more about the niche that Boohoo occupies and seeing if Boohoo is still a valid investment I should make or whether I should look elsewhere. So I hope that you don't mind this, and hopefully it will be okay. ASOS operates as an online fashion retailer across a majority of Europe, the UK and the US. They offer both men's and women's clothing, and these are under their own brands, but also resell global and local third-party brands, primarily through both their website and also their social media platforms. ASC is listed in the AIM markets, has 3,800 employees and a market capitalisation of £4.5 billion. I believe that ASOS is in a perfect competition, as they are an online retailer of clothing with multiple different brands which individually do not have more influence than that of other brands in the industry, and whilst brand recognition is important, it is not vital. Furthermore, there's limited barriers to entry in the fashion industry, meaning that almost anyone could start their own fashion business. I've even seen YouTubers that have created their own clothing brands. Whilst they may not be anything near fashionable, they could certainly occupy a very, very small market share in this large niche. And providing a company has the capital to do so and the investment into the market, then all they really have to do is build up a big social media following and then also build up a popular brand of clothing. However, this doesn't mean ASOS isn't able to create an effective moat, but certainly means it may require much more than other industries. For example, it may require much more brand loyalty, which is likely not to be gained just from the brand awareness, but rather from the customer satisfaction or service that they give on their own goods. And if this is better than their competitors, it's likely in that way they will gain a better market share, as really there's not much differing between the products and which brand a customer may use, other than slight different fashion styles and perhaps a slight quality difference in the product. ASOS is frequently compared as the main competitor to Boohoo, but I don't think this is the case. And in fact, I would rather say that the likes of Zalando or New Look are closer competitors, and this is because Boohoo actively sells their own products which are created by their suppliers. Rather, ASOS is more of a fashion reseller, and they do have their own brands, but they also sell other party brands as well. When looking at ASC's recent financial results, or the trading update that concluded at the end of December 2020, we can see that their revenue, or their total revenue, has grown by 23%, which I think is very impressive. Furthermore, they've increased their active customer base by 1.1 million to now 24.5 million, which could be very promising as the UK economy reopens, as people are maybe more inclined to buy clothing as they can show it off to their peers, whereas at the moment the only real demand for this would be loungewear, because people like to be comfortable whilst in lockdown, and perhaps for flexing on social media or showing off. But there isn't really an incentive to, for instance, go down the pub or go on nights out, or for instance go out in public, because we simply can't, and therefore I feel that there is a reduced demand in clothing in that regard. In the last 5 years, they've managed to grow their earnings by a compound annual growth rate of 10.7%. Suggesting to me that whilst they've had great revenue growth, their earnings are certainly lacking behind. This being combined with a profit margin of only 3.5% means that I have less confidence in this business compared to other businesses. And this is likely also boosted by the pandemic, as if we look in more recent years, it's ranged between 1 to 2%, going as far to say last year it was beneath 1%. However, this could suggest that their earnings may scale better with revenue. And over this time period, their revenue has consistently grown, so these could be one-off expenses that had been written off, for example. But over the last 5 years, their earnings really haven't scaled with revenue, and so it may lead less confidence for investors going forward, which could mention the valuation. They are priced at a significant premium. By the way, if you just heard that, I have a Discord group that's likely what's making the message sound. You're welcome to join, link is in the description down below. I've now forgotten what I was going to say and it was off script. So on the trading update, we can see a high domestic exposure to the UK retail sector, and most interestingly, this is also the sector that's had the most revenue growth with 36%. This could be due to the lockdowns, and in the UK we've had quite a few lockdowns over the last year. This had meant that a lot of the high street competitors or clothing chains, their shops have been shut, meaning more customers are looking online to buy clothing, which has put ASOS in a prime spot to benefit from this. Furthermore, on their financial highlights, we can see that they've had a boost from the pandemic by at least £40 million. But then we can also see that Brexit tariffs, as they are very much impacted by Brexit, have cost them £15 million. But what we can see is that if you're more bullish on the US or the EU, that ASOS still has a very small market exposure to these continents. And if you believe that this will change, as they are larger markets than the UK, then it certainly gives them a lot of more future growth potential after, for instance, they've exhausted their growth potential in the UK. It's worth noting that their outlook for the full year of 2021, or their financial year, is likely to be at the top of market expectations. And this is due to what I had meant with the pandemic benefit, but also your Brexit tariffs. And they've also begun their automation of their US fulfillment center, which is set to be complete this year. And they've also signed their 4th lease on their other fulfillment centers. In my opinion, ASOS has a great balance sheet with their short-term assets outweighing their short-term liabilities and long-term liabilities, but not combined. They have absolutely zero debt on the balance sheet and high levels of cash of over £400 million, although this is going to be different in the future, but at the moment I'm not entirely sure. And that's because very recently they had acquired that was Boohoo. They had acquired Topshop for £295 million. £30 million of this purchase goes towards the stock, and the other £265 million goes towards the brands themselves, but not the stores. There is in talks over the Oxford Circus Topshop store, which is quite a landmark on its own, and that may be kept on, but it's not of ASOS's top priorities. But regardless, we can see that they can likely increase the margins of the business, use the brand's well-known recognition to their advantage, and also diversify their market or their target audience. But at the same time, I also believe that Topshop has a very similar clientele to their existing customer base, and whilst yes, I believe it's good to specialise in a niche at a £4.5 billion valuation, is it not worth diversifying somewhat, which may reduce the level of growth, but increase the potential or lower the systematic risk from being exposed to one audience? As Topshop is a well-known UK brand which fits their core age consumer base of 16 to 34. Whereas the likes of their competitor, Boohoo, had acquired Debenhams, which I believe fulfills a different audience or consumer base, which would therefore give Boohoo a lot more diversification, I don't know what this hand gesture was meant to be, compared to the likes of ASOS. And then there's more inherent risk if ASOS is unable to keep up with the trending fashion styles, and therefore Topshop could likely still fail despite their high recognition, but this is an industry-wide concern for all competitors in this niche, which I think is a very valid and realistic concern to have if you're planning to invest in the fast fashion or fashion industry. But what we can see is that building a moat would be a lot more difficult than it is in other industries. And whilst ASOS does have some competitive advantages, such as providing both a mixture of cheap but also more premium quality goods, meaning that they are more resistant to economic cycles due to their more diverse customer base or not being as impacted by unemployment levels as much, they likely still can't build that brand loyalty, as if the fashion they provide isn't trending, then customers will likely just shop elsewhere. After all, it's a perfect competition and very little diversifies between each of the players in the industry. Furthermore, their ASOS brands are well known, and this is an advantage for them, such as their Instagram ASOS account having 11.1 million followers, but then on the other hand, a competitor of theirs, which is owned by Boohoo called Pretty Little Thing, has 13 million followers. And considering that they make sales using their social media streams, this could likely mean that Boohoo already has an advantage with just one of their subsidiaries. In the last 5 years, ASOS has rewarded shareholders with returns of 76.5%. And if you're wondering which investment platform I use on the channel, I use the Freetrade UK app, and if you'd like to sign up to that, link is in the description down below. In the future, I certainly believe there's scope for growth in the fashion industry, and I believe with social media becoming more prominent and dominant, the more people are exposed to individuals' fashion. Therefore, people are more self-conscious and therefore more fashion conscious as they want to look good on their social medias. Therefore, I think ASOS is well placed to benefit from this trend, and providing they're able to keep up with the changes in the industry, that they'll continue to do well. However, when compared with Boohoo, which is my holding, I feel that they have lower profit margins and less social media awareness, which gives me the question of why would I personally invest in ASOS over Boohoo? You may argue about ethics and sustainability, and lately, yeah, Boohoo has had some serious concerns with their corporate governance and also their supply chain. But we don't know if this is also taking place in ASOS, and at least we can see a little bit more into the business of Boohoo after the reforms of these issues. And in my opinion, I think ASOS is a strong growth stock to own, especially if you'd like a high UK exposure and you're bullish on the short or maybe long-term recovery of UK GDP. This is because a lot of consumers are currently saving money. This saved money is eventually going to be spent, right? We can't just keep saving and saving it, but so long as lockdowns continue and the pandemic keeps going, this money is going to continue saving. But then eventually, once we do open up the economy again, I strongly believe that people are going to start spending. And I think ASOS is well placed for this, as a majority of their revenue share is in the UK and they can grow a lot from this. But at the same time, will customers then choose to go to the high street stores? And that's something I personally am unsure of. But it does mean that I believe that pubs, nightclubs, more people will be going out actively, and therefore I think there will be a boost overall in the fashion industry spending. And whilst ASOS are valued on the higher end of the spectrum when compared to the likes of Boohoo, they are certainly at a cheaper valuation, and so therefore we could see that there may be more of an advantage or a potential should ASOS reform in the future to therefore have more growth via multiple expansion instead of the likes of just earnings growth. And so that could be an advantage against Boohoo as an investor standpoint, but it really depends on your thoughts on the long term and whether you think ASOS is disruptive and could really interrupt Boohoo's growth. However, I personally couldn't invest in ASOS, and that's because I hold Boohoo, and I think from my standpoint that they are a more superior company, and that comes from the fundamental investment standpoint. Although as a consumer, I more or less understand the fashion styles and trends of ASOS, and that's maybe because I'm less targeted by Boohoo's average age audience, but then again I'm in the categories of both of them and I feel more attracted to ASOS's goods. But then again, this could change at any point and Boohoo could adapt what products they are selling, and then I may feel more included by their product offering. But at the moment, I certainly feel that if I were going to shop online, I would more likely go with ASOS. If you're interested in my Games Workshop stock analysis, then click the card at the top right of the video. Thank you for watching, have a great afternoon.